Good morning. You listen to FloorDaily.net, and I'm Kemp Harr. This morning, my guest is David Crowe, the chief economist with the NAHB, the National Association of Home Builders. David, how you doing?
I'm good, Kemp. Good to be with you.
Yeah, so it's been, I think, May when we were together in New Orleans since I've talked to you, and I wanted to catch up. Why don't you start out by giving us kind of a feel for where housing is today as far as single-family and multifamily?
Sure. Multifamily has been doing extremely well. We are producing about 400,000 units on an annual basis. That's better than that long-term average that was established throughout the 90s and into the 2000s. And that's due primarily to the fact that the younger households that are farming brand new households are almost entirely going to the rental product for a variety of reasons, including affordability. Single family side has been doing better, but it's still in this very, very slow recovery that it's suffered through the entire cycle. We're running at just under 700,000 to just over 700,000, somewhere in that range per year. Right now, last year, as a comparison, we did 648,000 single families. So it's modestly moving ahead.
All right, so that adds up to somewhere in the neighborhood of 1.1, which is about the pace of the formation of households, isn't it?
Well, it should be the pace of formation of households. The household formation was severely depressed during the recession and the recovery. It has rebounded in the last couple of quarters. So we are beginning to finally see some household formations that do drive these larger numbers. And we expect that to continue. So I think these numbers will improve because of that household formation number.
All right, so, the people in the flooring business, we've been a little frustrated. We had a pretty good 2013. And then 14 and 15 is just, not really giving us what we were hoping for, especially in the single-family category. Tell us a little bit about what you think some of the headwinds or obstacles are for a more robust growth in the single-family housing market.
Well, I would say, first of all, I omitted the remodeling sector and sort of the overall view, but that particularly took a bit of a nosedive in 2014. So to the extent that some of that flooring product is intended for remodeling projects, that was a clear reason to see some fall off. That's beginning to return as well. Remodeling is driven by two things. One, more equity in the home. So as people feel comfortable with the value of their home, they're going to reinvest in it. And two, resales of homes, because people either fix their homes intending to sell them, or once sold, the new owners often do something different to make it their home. And resales stalled in 2014 as well. So those are contributing factors to the slower market. On the single-family new construction side, the slowness has been a double whammy for the same reasons. Most new homes are sold to people that already own a home or are simply trading up or trading to a different home. And resales have only modestly moved forward, a little faster in the last several months than certainly in 2014. So that's an encouraging sign. And it, again, is driven by the fact that people have a little more equity in their existing home to be able to plow back into a new home, and their job prospects are a little bit better. Job hiring has been picking up. Overall economic activity is a little improved and is expected to continue. So all of those things contribute to better existing home sales, and better existing home sales typically lead to better new home sales.
About a year ago, you and I were talking about the millennials and their lack of wanting to invest in homes. But there was some research that came out a couple of months ago that said that they had polled the millennials, and 70% of them, age 18 to 34, actually said they wanted to buy a home in the next 5 years. Did you see that?
I did, and that's very encouraging. Want to and can are the separators here.
Right.
The millennials have definitely shown a desire to buy a home, even back when things were a little dimmer looking, but their financial abilities are still limited. They got started in their careers at a particularly difficult time in the economy. Some of them have student debt. Our underwriting standards to get a mortgage are tighter than they used to be, so that's usually who that impacts, are the people that are starting out. So I expect them to make good on those desires, but it will be a slow process.
Talk about this underwriting limitations. Is there any easing of that lately where maybe it's a little easier to get a loan if you have good credit and don't have a lot in the bank?
Yes, I think there is. It's my impression and my opinion that the policymakers, the rule makers, basically overreacted to what was clearly some mistakes in mortgage lending in the middle of the boom. But as often happens in policymaking, the pendulum swung too far in the opposite direction, and so we did too much restrictions. That does seem to be beginning to correct itself, both through official policy, both from the administration as well as some effort to change some of the laws that were originally passed, and also financial institutions who obviously took a lot of heat and a lot of hits during the collapse, and they're getting back to where the barriers are, where the lines of demarcation are located, so they can blend closer to those restrictions rather than staying farther away from them just to be safe.
Mm-hmm. How much of this slowness in the building market can we blame on the trained labor, the ability of the subcontractors, the construction workers? That's also a factor, isn't it?
It is. All of construction, and certainly housing construction in particular, has suffered from a great deal of the workers that used to be in the industry have left during that long period of inactivity. And so we're having to train new people is essentially what it comes down to. We're trying to bring in younger people, make construction work an attractive alternative to other job opportunities. And that, it's another slow process. It's not going to happen overnight. It has delayed construction more than limited construction. But it has had that impact.
Well, let's talk about rates, especially this week as we look at the possibility of the Feds raising rates. Do you think that will happen?
Well, it's my opinion that they will this week, although it seems the consensus is moving further out into the year, perhaps December. I don't think that the economic news we've seen of late is that discouraging, which is what the Fed has always promised. They will base it upon the best information they have. But I would say, as far as mortgages are concerned, I don't think it really matters whether they raise rates this week or in December. They're adjusting short-term rates, those rates that have been at zero. They're not adjusting long-term rates, mortgage rates. Now, certainly there is some connection in the yield curve between the two, but it's a distant connection, and I don't expect to see mortgage rates rise, at least because of Fed action. So they will likely rise more because of a better economy.
Okay. So as you look into the future and we start planning for 2016, do you think that we'll have a little bit stronger housing market next year than we see this year?
I do think we'll have a little stronger one, and I think it's in fact due to some of the questions you asked. I think we will begin to see some of those older millennials in particular start to become first-time home buyers, mostly into existing homes, but that means that existing home seller will be able to buy a new home. So I'm expecting to see a decent increase in the single-family side in particular. I think the multifamily rental market is where it needs to be, and it will continue, but not a lot of increase.
One of the things we've seen lately are rent rates are going up, and so that's going to motivate folks to consider buying into their own home, wouldn't you think?
That's exactly right. I think that you hit the nail on the head. That is one of the reasons I expect to see some millennials moving into ownership, because they'll soon discover that the monthly rent is more than a monthly mortgage payment.
And as Warren Buffett said the last time I was listening to him speak, one of the best ways to build wealth is to have a home, right?
It's a much larger wealth amount for middle and lower income families than anything else. Their wealth is almost all tied into their own home rather than any kind of stock portfolio.
All right, David, it's great to spend time with you. Again, been talking to David Crowe, the chief economist and a Ph.D. Actually, you have a degree in economics from the University of Kentucky, don't you?
That is correct, Kemp.
Yeah, all right. And you've been listening to Kemp Harr and FloorDaily.net.